Big Short investor Michael Burry targeting tech giants' accounting practices now. He is accusing firms like Oracle and Meta of inflating profits by extending the life of chips and servers to understate depreciation and boost earnings. He posted this on X, saying more details coming on November 25th. Last week, you remember Burry bet against NVIDIA and Palantir. President Trump, meanwhile, is going to be hosting top Wall Street CEOs at the White House today. He will have J.P. Morgan CEO Jamie Dimon, NASDAQ CEO Adena Friedman, Goldman Sachs' David Solomon, and BlackRock CEO Larry Fink, all set to attend. The president strengthening ties with corporate leaders while trying to rebuild domestic supply chains critical to national security. Jacob, your reaction?
Well, to which part? I mean, if you're talking about, first of all, in terms of the three indexes, I like that they're stabilizing at key levels. I think the NASDAQ's somewhere around a little over 20,000 right now. We haven't fully gapped higher, but that's fine. You need a little bit of a reset on the indexes. We got the reset, and now there's a really nice stabilization, a little over 20,000 for the NASDAQ. And then in terms of what Michael Burry's talking about with accounting for big tech, first of all, there's one person saying that. That's number one. Number two, if you're an investor, especially in mature companies or large companies, you have to look at free cash flow. The truth will be revealed when companies have to make investments to renew capital equipment or new operations and chips, and you just look at free cash flow.
Yeah, I mean, like, we are also looking at all these deals. I mean, the top story in the Journal this morning, tech giants need so much money for their artificial intelligence ambitions that they're developing new ways to get the money because of all of these deals. They're sort of like circle deals. You know, NVIDIA investing in OpenAI buying the chips from NVIDIA. You mentioned it earlier as well. Right. I mean, these are somewhat circle deals.
And I think that's part of Burry's story, right? He's not only talking about the depreciation stuff, but I think he's also talking about how they're all in bed with each other, and so he's concerned about that. I think the weakness that we saw in NASDAQ yesterday was part of that negative story from Burry. I think it was also the headline that SoftBank sold their complete position in NVIDIA. People took that as a negative. I didn't take that as a negative at all. I had clients call me up saying, should I sell my NVIDIA? No. Why are you selling your NVIDIA? Well, because SoftBank sold their NVIDIA, but because it hit their level, and now they're going to reallocate that money. But that's not a signal to sell NVIDIA. I think that was yesterday's
What do you make of the China aggression, though? I mean, now China is planning to exclude U.S. military-linked companies from rare earth exports. Right. This is a big story.
Right.
The Wall Street Journal is reporting that Beijing is designing a new, quote, validated end-user system, which will fast-track export approvals for civilian firms. Right. But it is blocking the materials from reaching American defense contractors. After a brief flurry of orders last month, China's purchases of U.S. soybeans reportedly stalling, despite the recent trade truce between the president and Xi Jinping. Kenny?
So I think this is more tit for tat, right? We're blocking some of the chips getting to China, then they're going to turn around and block the rare earths getting from our military. So they're going back and forth. And then, you know, the fact that they're pulling back on the soybeans, on some of these soybean purchases, I don't know if that's just temporary or if that's just now China kind of trying to rattle the cage a little bit and get them all stirred up again and create more chaos in the markets and chaos in politics with Trump. So we'll see how that story unfolds. But yes, it could potentially be a significant story.
I mean, it's a significant story because, by the way, that's why we needed the magnets.
Correct.
For the military. That was one of the most important reasons for these rare earth. And look, the president is doing everything that he can by getting the supply chains here. They took an investment in MP, Mountain Pass. Right. They took an investment in Intel. They're encouraging, you know, NVIDIA to do the Blackwell chip here, and they are. This is the most aggressive and important chip out of NVIDIA. It'll be made in Arizona.
Right, but he also made those rare earth steel with Australia and Cambodia and Thailand. So he's diversifying away from China, trying to take that control away.
Right.
And I think this is a reaction from China, right?
It is a reaction from China. The way I like to think about it is just what does it mean for the market that I and a lot of people watching right now look at every day, the U.S. equity market. Everything that I hear in this conversation, I just hear tailwinds for U.S. industrials. Manufacturing, certain services companies. It's actually, by the way, I wrote yesterday that I think after XLI Industrials flatlined for a while, still kind of flatlining for a bunch of months, with earnings just growing, you're getting a more attractive stock price, a more attractive PE multiple for long-term growth stories, onshoring and industrials. That is what I hear when I listen to this conversation.
You've also got an easier Fed, and that works into your theory as well in terms of, you know, strength for America. I mean, look at interest rates this morning. Down down 3 basis points, Jacob. ADP data showed U.S. companies shed about 11,000 jobs a week in late October. We're waiting for the official return of government data, of course, but a Labor Department spokesperson told Fox once the government reopens fully, economic reports will trickle back in phases. The September jobs report and the producer price index expected next week, followed by October's data when that's ready. Jacob, what are you expecting on the macro story in terms of data?
First of all, I think Kenny said maybe 20 minutes ago that you'll see a blip in the economic data. Like, you're going to see a little bit of weakness where there just wasn't any money spent from certain people, like, airport employees and that type of thing. There was a lot of money that got stuck not going into the banking system that will start to flow through. And I think the market is pretty comfortable, like, expecting sort of a V-shaped recovery situation from, the couple months or month or so of shutdown back to non-shutdown. I'm not really worried about that whole dynamic. What I'm a little bit concerned about, we will get Fed rate cuts. I don't know that we're going to get a flurry of them. I know that the job market is weakening, and that is a positive when it comes to the narrative that we'll get lower rate cuts. But inflation at 3%, it bothers me.